Some of the questions that we got online as we were preparing for this, a lot of people want to know what's up with the heavy allocation of farmland. You talked about it a little bit earlier. Maybe go into a little bit more detail. Just when you talk about farmland, kind of how do you think about good investments there versus bad investments, and also through market cycles, just holding the same allocation of the farmland, or does that change over time?
Farmland's tough. It's an asset class. It's one of the few that's not well represented in the global market portfolio, because the vast majority of it worldwide historically has been in individuals or massive institutions like Nuveen or Kreft that own just these enormous farms. There's not a whole lot of middle ground, and it's been hard for most investors to allocate to. So today, if you wanted to go get a farmland allocation, you got to either go buy a farm and then manage it, which is a nightmare, by the way. Thankfully, we have a lot of friends and family in the area that can help out. Two is you could invest in a private fund that does it. We've had a few of those on the podcast that talk about it. There's some platforms that are coming out that make it a little easier. If I was a young entrepreneur not doing what I do now in the ETF business, we would probably go and launch a public REIT. There's only like one or two that do it that would give access to it. So it's hard. It's a great diversifying investment. Like a lot of investments are just non-correlated. If you got a blueberry farm in Oregon or a wheat farm in Kansas or an almond farm in California, or like those things don't traditionally correlate directly to what's going on in the rest of the markets, which is what you want. And then you have, of course, the private benefit, which is, I put a picture on Twitter the other day of me walking through a wheat farm and says, look, I'm trying to value this today. It hasn't traded in forever. Like, I have no idea. I couldn't sell it if I wanted to. So like for a lot of people, for me, it's farmland. I don't own a house, but for a lot of people, their biggest illiquid investment is their house, right? They probably, maybe with Zillow, can come up with a little more today valuations, but they can't sell it tonight. It's not something they would if they wanted to. It's a lifelong investment. But it's a big part of people's wealth. And so one of the reasons people across the country and the world have become so rich and wealthy with real estate investing is because it's money they would have spent otherwise. You're putting money into real estate, like it's getting invested, same way with stocks or where else. So farmland, but if it's personal for me, it's a connection to my family and my history. Would I be investing in it had not that? Probably not. I would be attracted to it. There's a lot of asset classes I'm attracted to that I think are interesting, but certainly wouldn't be such a large allocation. Plus, you can go out and shoot guns and hide out from the rest of the world and, drive around on ATVs and horses and everything else.
You're talking to a guy who also grew up in North Carolina, so those are all fond memories for me as well.